Hey, good morning, everybody. Thank you for joining me. A lot on the plate this morning. First, I'm going to let the cat out of the hat. I'm going to share something with you. Cat out of the bag, I guess it is. I was going to come on this morning and tell you guys, hey, look at yesterday's chart of the SPY. Definitely a bullish chart. They were buying the dips, the rip that came at the top, and that we revisited at the end of the day. We're probably going to push higher. I was hoping the SPY was going to be at 394 or 395 this morning so I could execute my strategy because I could see from the charts that we were going to be green today. Now, as we sit pre-market and futures are ripping, the SPY is up 0.91%, I come and I'm like, okay, new strategy. There's no way I'm going to chase at market open with the SPY being up close to 1%, even if I thought it was going to be a good day. And I would say, okay, the SPY maybe up 1.5% end of day, maybe 2%. There's no way I'm going to chase and jump in when half the gains are already there. When you have the SPY supply zone, I'm going to talk about the supply zone of the SPY and why it's ultra important. So let me just get right into it. And then I'm going to mention Fed comments from yesterday and Fed comments from today that make me question the market's direction. Okay. So first off, supply zone on the SPY. Let's guess where it is. It's right at 397, 398. Where are we sitting pre-market? Great question. Let's see. We're sitting at 397.71, right where the supply zone is. So understand, even if we get bought up at market open and you're like, oh, there's 399, I would say be careful because 397, 398 is the supply zone. And we know the market likes to try and fool you. The market's not like, hey, futures are up, morning's up, afternoon's even higher. Hey, everybody's making money, bank on Friday. No, the market's like, hey, futures are ripping. We're at the supply zone. We even went past it. If I'm an institution, if I'm a hedge fund, if I'm big money and that's my supply zone and I'm selling my ETF right at that level, what am I going to do? Shit, I'm going to let the market push up to 399, 400. Can I get 401 before I start unloading my shares of the SPY ETF, before I start unloading my shares of Microsoft, Apple, QQQ, et cetera, et cetera? So understand the psychology. That's why, although I had a great strategy as the market closed yesterday, and I was like, definitely green day today, definitely we're going to see 398. I'm going to buy the dip. Maybe we'll see 392. And when we see 392, I'll buy calls and we'll ride it up to 398. Well, shit, that strategy is out the window. Why? Because the SPY is already at 398 pre-market. So as it sits at 398 pre-market, and I know that's a supply zone, I don't want to get there because even if they pump on market open, all of a sudden the institutions will think, okay, well, now we're getting better than 398. We can unload at 400. We can unload at 401. We can unload. So why do I think they might unload? Again, my strategy is ruined. So what am I going to do today? I'm going to wait on the side. Why? Because if we see the top of the market, whatever time, and I identify the top and it's 1 p.m. and I'm like, oh, we're at the top again, we're going to reject, then I'm going to go into lotto puts that expire same day. Vice versa, if the market gets ugly at some point and we see support, I'm going to wait till 12, 1, 2 o'clock, and then I'm going to go, okay, well, we definitely have support. Although it's not a great day, we still might close higher. So understand, have a couple of strategies in mind. Again, let's talk about the SPY ranges of support and resistance. And then I will talk about Fed comments. Metzger spoke, Bullard spoke. I don't know if Powell said anything, but I'm going to report a couple of comments. Okay, so SPY, right? Let's just say 397, 398 is the supply zone. Let's say the market spikes on open to 400 and then sells off to the supply zone level and we go a little under. All right, I'm going to tell you where support and resistance is. Right now, the lower levels are support. If we break down, they will be resistance, okay? So right now, support levels, 389.60. So you can say 390, okay? 392, next level up. 395, next level up. 397.98, where we're at right now. Then 401. If we break through and it's a bullish day or a bullish week, today, Monday, Tuesday, you're looking at 401s, the next level higher. After 401, you're going to see 405. Now, that is another supply zone. So if we go up and we break through this supply zone, you're looking at 405 for the market to potentially reject. So that's your bull case scenario. Okay. Your bear case scenario, same ranges. Okay. Now, as we break through, I'll mention it before I talk about the Fed. I'll talk about my ranges yesterday, why they're this important. Pre-market, I came out and I said, okay, I could see the top of the SPY at 395, the bottom at 389 to 390. Well, let's look at the SPY yesterday. Where was the top? 394.95. 394.95. So I missed by 5 cents. 5 cents I missed by calling the top. Pre-market, pretty damn accurate. The bottom, I thought we'd see 389.60. We saw 390.14 is the bottom. Okay, so you got my top, you got my bottom. Shit, both numbers hit almost perfectly. Okay, so what am I expecting as far as today? Again, if I had to make a prediction, okay, I'll do a prediction. This is off the top of my head. We'll say bull case scenario. So we'll say that we retract at some point back to 395. Bull case would put us at maybe 402 on the top. So 402.20 on the top. That's going to be the number that I'm going to make a prediction about. And 395 on the bottom. That is a bull case scenario. That's saying we break the supply zone at 397. We're above pre-market, and the market is strong today. Okay, as long as the market's strong, there'll be some pullback at some point. The market's strong, 402 on the top side. Now let's come up with a bear case scenario, which I don't believe, but I have to be fair, right? Because the market's already pumping. Bear case scenario is the market pumps even a little more at open. So from 930 to 945, it pumps a little more. We're at 398 on the SPY. We see it touch just at 400. It's like 400. And as soon as it hits 400, and this is your bear case scenario, even though we're going up, as soon as it touches 400, boom, it rejects. Or maybe 399, like 95, like it's almost going to touch 400. Then it rejects. So 400 would be my top level. Guess what my bottom level would be? 394. Now, why do I say 394? Because if you go back to last Friday, Monday of this week, Tuesday of this week, and Wednesday of this week, do you know where the bottom was on the SPY, where it found support going back to last Friday? 393, 394, 394, 394, 394. Holy shit, 394 seems very logical. So when I give you data and information, I say, okay, if the top's 402 and we spike right after open and then we have a whatever and then we end up selling off at some point in the day, I could definitely see us going to 394. Again, 395 is support, but generally when it bounces off support, it generally goes about 50 cents under. So you'd be like, okay, 395, 394. And oh, it bounced really quick. Now it's back at 396. So yeah, when it hits support, it tends to bounce higher, like a whole point, which is like 0.25%. Okay, so what did the Fed say? Okay, well, let's come out. Let me give you a comment that one of the Feds made this morning, and then I'll talk about yesterday. So New York Fed President John Williams says the central banks should stay focused on its economic goals and avoid incorporating financial stability risk into its deliberations as it raises rates. It's basically saying the Fed should stay focused on what the Fed's doing and pay no attention to the market. All right. So if the Fed doesn't care if the market goes up or down and they stay focused, then they have to stay aggressive. They have to stay hawkish. Now, that comment follows up another Fed speaker, which was yesterday morning, where he said he anticipates, I think it was Bullard, he anticipates the rates to go up between 5 to 7% to counter inflation. All right. They're looking for a soft landing, possible recession, as long as inflation is down. Now, inflation means the price we're paying for eggs, for gas, for rent, PPI, CPI. That's why those numbers are so important, because it costs us more money. Let's say compare this. Well, I won't compare. That's the story I saw. All right. So what else is happening yesterday that made me a little weary of the markets? Well, you look at the 2-year interest rate, and I'll do it on my phone right now. 2-year interest rate, which was 4.36, right? Then went up to 4.46 at some point yesterday when the markets turned a little bearish before they recovered. And yes, they recovered too. I can show you right here. See, but from here, the top of this point right here towards the top was at 2 p.m. till it dipped. The 10-year, the 2-year, all the rates went up. The 2-year rate went from 4.36 to 4.46, 10 basis points. As the rates go up, it makes our markets more expensive. Now, where's the rate this morning? 4.48. So it's kind of consistent, staying at that flat plateau where it went up to yesterday. But understand, these rates are going to go higher. And as they go higher, that'll push the downward momentum on the market. But as long as the rates stay consistent or even drop a little, the market can still be strong. Again, 10-year, 3.80 this morning. Yesterday, 3.73. So it's up 7 basis points since yesterday morning. Again, not a major impact, but you can definitely see the rise. Then you're looking at the US dollar. As the US dollar spiked, remember a couple of weeks ago, it was 112, 113. It's back in the 106.50 range. I used to talk about the 112.50 range as being expensive. So 106.50 makes it extremely cheap to invest in our markets with the US dollar where it is, which is why we've had this bullish run. Rates have come down, right? 2-year was 4.70. Then it came all the way down to 4.21. Now it's back at 4.4, but it's still under 4.5, which is my cutoff. US dollar under 112, my cutoff. So the market can be bullish. Now, my only concern about this bull run in the market is volume. Now, if the volume is there, then we break the supply zone at 398, 397, 398, and 401 is the next level higher. Okay, no brainer there. Okay. Now, again, even if I am going to be a bull, I'm going to be cautious. So I wanted to talk to everybody real quick because I was red yesterday. So this is something I want to share because we all feel this way, man. We all make great strategy. We fail to execute. So yesterday I said pre-market 395 on the top, and then to my Discord during the day. And if you want to join my Discord, 7 free trial days right there. You log on, you verify yourself, prove that you're human, and you get all the rooms. You have myself, Romeo, Love. We have all the algo rooms. People pay hundreds of dollars a month. Our service, well, it's free for 7 days, but after that, it's like $34.99 a month. People literally pay just for the algos like $100. Okay, so my point is, before I just got sidetracked, yesterday I said 395 the top, 390 or maybe a little under on the bottom. And then I told my Discord when it was at 395 that it will test 394 and it will probably bounce higher off 394. But if it breaks 394, the SPY will go back to 392, which is where it spiked up in the morning yesterday. So it was a great strategy. We went to 395, 394. We tested that 392 back in the day, in the afternoon, right here in that dip, right? Here was the 392. And you could see it. See where the first spike was right here? Boom, we basically tested that low. You're about an inch apart right here, or a couple hours. We went above the trend line, then we fell below the trend line. So this is very important. This VWAP is very important thing to look at. But the point is, if we fall, let me just look at it one more time. I mean, it's just, it's sometimes trading is easy. Okay, when we break above, you know that we're going to come back to the line, even though the line is going up. And I know PB has been using this trend line a lot lately. You have to use it later in the day. So you have to let a trend start, and you have to use the data in order to establish the line. But it's really great because if you're bullish a certain stock or ETF, but we can talk about it works for stocks as well, and you see your trend line here and your stock down here, and then you look at the 5-day chart. I love to look at the 5-day chart. And what you'll see on the 5-day chart is it tends to hit that line, the trend line, even if it's below or above. Those are the same ways or teachings we use when we use the flow and algos room. So you know what? Let me just see if I can bring that on so I can talk about that. Present. Let me just see if I can share my Discord link with you guys. Let's get it up there. Okay, now I got to find the flow and trend. So here's on Discord, right? We have all these great things. There's my alerts. There's Love's Corner. Romeo has his watch list. Romeo's live. All that good stuff. But my favorite room. Okay, if you want to use simple rooms, you go to Golden Sweeps and you see where big money is going at the end of the day. Golden Sweeps, Baba. Guaranteed Baba is down this morning. It came in at 2:39 p.m. I think Baba's off a few percent this morning. It gives, here's another one. One higher. What else they do? Up there it was, Baba again. AMD. Bet you AMD is green today, right? That's how these work. Golden Sweeps is showing you big money. So if you're like, holy shit, man, that stuff is free on your platform. Yeah, it's free on my platform. But I talked about algorithms. So I would type in TR, let's look at the algo flow, and let's look for the market. Hopefully this works. Oh, great, I just advanced to level 2. Okay, so here's what you can see for the market. The market price is up here. So the market's spiking. The algos are trying to catch up. The algos are still saying the market is a little still strong. See, what you can see is, the same thing. When the algos were strong up here in the beginning, up here in the beginning part of it, right? What happened? The price of the stock market caught up and now they ran in line with each other. Now the price of the stock market's up here. So it's either going to come down to match the algo, and you can see the SPY 392 is where the algo has it priced at, or the call options are going to get bought up and you're going to see a crazy spike. What's likely to happen is, since the price pre-market is up to 397, which is off the charts, it's likely to meet in the middle here. So again, although I say I'm bullish on the day, oh shit, you guys weren't even looking at that with me. Holy crap. Let me do it again. Sorry about that. All right. So now you got the algo with me. All right. So we can see the green. Okay. The green is the algo. It's the price of the options, the algorithms telling you where everything should be. So as the algo was up here in the beginning, you're seeing that the SPY was actually in the 390 range. What happened? SPY caught up. They caught up to each other at 394. They tend to match up. So understand, when you go all the way to the right here and you look at the yellow and it's at 394, you have to go 4 points higher. The price is actually 398 pre-market. The algo is still at 392. So even if it opens and it goes up to like 394, understand it's likely the price has to come down and they have to match up at some point. So that is how I trade. So with that said, even if I was bullish going into today, which I was, I would not chase over a 1% move upward. Yes, I think the top will either be 400 on a bear case scenario. So bear case 400 going down to 394, right? 400 to 394. That's a bear case because 394 is below where we closed at yesterday or yesterday's close. We're going to touch that again, I think. Bull case scenarios, now we don't get close to that. We go down a little, we bounce off 396 or something like that, and we're back at 401. So again, that's the options for today. Now, let me tell you about my strategy, okay? My strategy, everybody mentions Lotto Fridays. So what the hell do they mean? They mean when they're buying a Lottery Friday option, their option expires on Friday. So their option, if you're using like a Webull service, they probably sell your option for you at 3:30 p.m. Same with like Robinhood. I think Moomoo lets you hold on to it longer. So that's another reason I like Moomoo. Again, we have a link over on the side. Deposit $100. You get a $10 coupon, 5 free stocks. It's like a 40% return without doing anything. Deposit $1,000. Now they give you 15 free stocks. So your return on $1,000 would probably be like 10%, $100. Anyway, the point is, Lottery Fridays, you hear it all the time. It doesn't mean you jump in, cross your fingers like the lottery, and that you hope to win. It's telling you, if you are going to buy calls and be bullish, then you're waiting for the worst drop on whatever stock or option you're looking to play. You're looking to get in. It might be 1 p.m. when Palantir or Coin drops to its lowest point. And you're like, well, I know Coin's going to rebound before the end of the day. So you're buying calls at 1 p.m. when it's at its lowest point. When you buy just lottos and you come right out of the gate, you're like, I'm buying calls here. You're going to see this in your stock and you're probably going to be a loser. So lottery just means you don't have any time. It's like instant gratification. So the only reason to get into lotto options is if you're looking to be instantaneously right. Like you see Delta Airlines drop down a whole dollar off some news and you're like, that news is bullshit. Delta's going back up, and you buy your lottery calls. Or the market is spiking. Everything is spiking. And at 1 p.m., you're like, this is bullshit. They're going to sell off before the weekend starts. And that's your strategy. Then you're like, okay, I'm going to buy a lotto put. And then you're right. At 2 p.m., the market starts to sell off. And you're like, boom, that was my strategy. Now I'm getting rewarded. Okay, so here's a quick question. I'm going to go over some questions now. So I deposited $100. I only got one stock. What do you need to do to get 4 stocks? Okay, once you deposit the $100 and it actually clears, which sometimes takes 5 business days. So if you deposited it last Friday and your money finally clears today, then you click on the rewards section, meaning you click on your little icon picture of your face, and then it says, data, something, and then rewards. You click on rewards, and then it says claim stock, claim stock, claim stock. And all you do is go claim, 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 claim. Me, I got a share of DraftKings. I got 3 shares of BlackBerry, and I got a share of Fuel Cell. Altogether, it was like $31.50, right? I didn't get the $10 coupon. Anyway, all right, let's see what else. Hello, watching. Let's see. You're watching algos. You can type in came across the top of your phone. Yes. Okay. What do we got here? Yes, you can follow Twitter. Also, SOC Trading. If it's a dash, that's where you find our Discord, soc-trading.com. That's our Discord. Snow. Okay, so let me look at snow. First of all, I love actual white snow. I haven't seen it in like 11 years, ever since I left New York. But let me look at snow real quick. I believe snow is heavily institutionally owned. So let's just see that right now. Look at the profile of the company. 68%. So doesn't really tell me all that much. I'm going to go back to the Walmart chart. They've still sold snow even yesterday. Snow could technically go down to 134, or it could go up to, let's see, probably the 153 range. This morning we're at 151. So yeah, I mean, if I was following snow, I could be bullish because the market's bullish. You're probably going to get a better spike at open, but I can easily see it rejecting 153. The same way I said the market can easily reject if that supply zone is there when it hits 400 right off the market open, something to that extent. You know what? Why don't we, can I add, let me see if I can look at snow for us. Okay, so let's bring up Discord, and this is how I do it. If I was interested in playing snow, I would go to the Flow and Algos channel right here, and I would type in TR. I would look at the net flow for snow. Oh, hopefully you guys can see this with me. Oh, you can. Thank goodness I did it right this time. All right, so let me just pull this up and get it larger for you. Okay, so here you go. Here's the net flow for snow, okay? So what you can see from this red line, starting here, the price of puts became more expensive, more expensive, more expensive, and it closed the day at the most expensive. The stock price was down here. The cost for calls is also up here. So what's likely to happen is the price is actually likely to go up because both of these lines are higher. And what are we seeing this morning? Snow is right where it is here at 151. So I wouldn't mess with snow today because right now, if you look at it, calls are up here, puts are up here, price is down here, but upon market open, price is actually going to match the calls and puts. There's no deviation. So what I mean by deviation is if your stock price is up here, but your algo price is down here, it's a bearish divergence, meaning your stock price will have to meet your algo price in the middle. Same thing. Let's say your stock price is down here and your algo price is up here. Your stock's going to go a little higher, right? So it's the same thing. All right, let me see if we got any more questions today. Then I'll talk about some stocks. Yeah, please, everybody, look, hit the like button. If you like actually listening to me in the morning, I think some of you do because I get a lot of comments like, hey, dude, appreciate your morning video. Hey, you were spot on. Please give me a thumbs up or make a comment because understand YouTube is all algorithms. So whereas I love sharing with you, I would love to share with 2 times as many as you. And that only happens if you make comments and do things like that. All right, so what do we got here? Josh, thoughts on playing the 200 EMA on the QQQ? Looks overbought based on trends, should be back down in the next couple of days. So Josh, very smart comment, okay? The 200-day moving average, let's just say for the entire market, whether it's the QQQ or it's the entire market, is coming upon us. If it were on the SPY and you're looking for the 200-day moving average, it's right around 406. So yes, I 100% agree with you, Josh. I am a longer-term bear, but there could be some more bullish movement. So I could definitely see the SPY go up before it rejects, and maybe we sell off towards the end of the year. You know, everybody's thinking about Christmas rally. Everybody's remembering Christmas rally. It happens every year. Every year stocks go up at the end of the year. It's like telling everybody this is what's going to happen. Now, what do the institutions like to do? They like to do this to us. They like to tell us one thing and then go down. Let's remember in June when Jamie Dimon came on from JP Morgan Chase and was like, the market could fall. It's like a superstorm. And what do we see in June? Bull rally. Then I mentioned my conspiracy theory. Jamie Dimon came on about a month and a half ago, and he was like, be careful, Superstorm Sandy again, 20% downside potential. And what happened? We rallied into October, 14% higher on the Dow, 6% on tech. November, tech is like 5 or 6% higher again. So please understand, these moves are not normality. If you went up 5% every month, guess how much tech would go up in a year? 60%. Well, shit, the market has never had a success story where the market's gone up 60% in 1 year. I mean, if one stock does it, that's great, but the market as a whole just doesn't happen. Just doesn't happen. So yes, I happen to think the market is a little overbought. But just because I think something, it generally takes the market days, if not weeks, to agree with me. So here's a problem I had. I would be like, yeah, market's overbought. It should go down. I would buy options that go out 1 week. I'd be like, oh shit, I'm on the wrong side. I take the loss. And then 2 weeks later, it drops. I had a friend that used to do with Tesla, lost $250,000 playing Tesla puts when Tesla was going up in 2020. It went up every week until the 1 week he didn't play the puts, and he would have made $500,000. But instead, he just lost $20,000 a week for like 10 straight weeks. Again, decent strategy, but he easily could have bought out 6 months down. He could have put all his money in for whatever options, and he would have been a killer in the end. It's all about your trading strategy and executing your trading strategy. Let's see what we got here. Any more questions? Thanks for answering my questions. No. Okay. TGT. Okay. So this is Target. Okay. Let's pull up Target. Let me just see if I can pull it up on Discord real quick. If it works, I'll bring it up. NetFlow, TGT. Let's see if that works. RTR. Let's do Algo Flow. Yeah. I didn't know if it was going to work. Let's try it again. Let's do it lowercase. Algo Flow, TGT. See if that works. Okay, yeah. So let me pull that up so you guys can see it. So somebody asked about Target. Here's the Algo Flow. So I exited out of my Target puts yesterday. Why? Because it was just ridiculously pumping. You can see call premiums, expensive stocks on the high side. Usually when there's a divergence, one is lower than the other. You can see it catching up, but that's not the case. So again, I was in some Target puts. Why? Because Target was spiking off ridiculously not so good earnings. They were buying the dip. Target pushed up high. I thought it went too fast. I bought some options. I think I paid $2 and let's just say $2.10. I don't remember what I actually paid. It was $2, $2.04, $2.10, $2.15. And it spiked up to like $2.60. And I was like 20% profitable. And then what did I do? I took a green position and I wrote it down. As the day went on, even with the dip gave you a chance to get out. I got out at 154 contract. I took like a 30% loss on that trade. I was green. And then it bounced like 20 cents higher. So I literally left like a couple $100 on the table, and then it fell even lower. So that's kind of my thought there. Meta is going to move with the market. So Meta, anytime you're following Meta, Apple, everything's going to move with the ranges today. So if the SPY breaks the 397, 398 level, which is supply zone, and it holds above that, okay? Then yes, all these stocks, Meta, Affirm, Roblox, Pins, Target, energy stocks, they're all going to go higher. There's no doubt about it. Same with like DraftKings. They've been buying up DraftKings like nonstop. If the market's green, DraftKings will go up from, instead of 1% pre-market, it'll be up like 6, 7% today. So there's a lotto play. Again, if they're buying up the market, I happen to think, based on what Josh said before, 200-day moving average should be some rejection. I happen to think the SPY should reject 400. If it breaks 400, I would expect it to reject a little past 401, so maybe like 402. So again, bull case scenario, 402 top side, bear case scenario, 400 top side. Bull case scenario, bottom side, 396. Bear case scenario, bottom side, 394. So yes, if I'm saying low on the day at 396 or 394, and we're opening at 398, then at some point during the day, I do expect the market to dip, similar to what it did yesterday or the day before. I mean, we've had very few days where it's just steps higher, step higher, or step lower, and the market just, usually there's a lot of volatility, and there's more volatility when volume is down. Lately, when we go back to last Thursday and Friday when the market exploded, volume on the SPY was crazy good, over 100 million. Lately, it's been like 68, 72, 74, lighter by 50%, meaning more swings, more crazy spikes, more crazy dips. So that's kind of my strategy for these days. Let me just see. Oh, yeah, World Cup starting on Monday. I don't care what team you're rooting for or what country you're from. World Cup is one of the best sporting events ever. I wish they had it every 2 years. But again, if they had it every 2 years, it would disrupt all the Premier Leagues and all the other soccer leagues and things like that. But I'm ready for the World Cup. Yes, it's in Qatar, Arcader. Any stocks related to the World Cup? NEO? No, I don't think so. Hey, you mentioned a below view. How many minutes do you look for a hold time? Okay, here's a good question. When you mention the above or below, can I ask how many minutes you look at the hold the direction? Yes. So when I am looking at any chart, I have 3 different levels that I look at. Some people look at the 1 minute, the 3 minute, the 5 minute. I like to look at the 1 minute, the 3 minute, and the 15 minute, and I'll tell you how I use those. The 1 minute I use as a sniper, right? As a sniper, you're there, you want to nail it. Sniper just means market's throwing up. You can see minute by minute it's going lower, and then you look at that 1 minute for that volume where you see, okay, a buyer just stepped in here. There will likely be more buyers. So I call that the sniper because I'm ready to snipe that position. I'm like, okay, I saw volume. I saw a reversal potential, okay, a potential reversal, and then I will start a position. Then I look at the 3 minute to make sure the 1 minute charts are sustained, that it wasn't just a 1 minute upswing and now it's falling more. Now, when you look at the markets, you tend to see that in the morning. What you'll see is going from 9:30 till about 10:15, you'll see the market one direction. And then usually at 10:15, I call it the fake out. If the market's bullish, all of a sudden at 10:15, you'll see a sell off like that, right? Or if the market's bearish and it's going down as we open the day, all of a sudden at 10:15, you'll see an upturn. And then generally what happens is it gets worse. Same thing when it's bullish. You'll see that downturn, and then generally happens it gets better. Okay, so 10:15 is my fake out time. I also tend to see that between 11:15 and 11:20. There tends to be a little bit of a fake out, so be careful. I got a question about NIO. Haven't looked at NIO in a while, so why not pull up the chart on NIO? Let's look at this scored real quick. Here we go. Okay, TR, cool check. You didn't put in a stock, what you're looking for. You have to type in big flow like this, and then you enter your stock. But there's no information for NIO. So let's see flow sum. Let's see if there's some for NIO. Might not be because it might not be enough volume. Let's look at the net flow for NIO. This will come up either way. Let's just make sure I'm sharing it. I am. Let's make it a little larger so we can talk about it together. So what do I see for NIO? Okay, the first thing that's most interesting, okay, the cost for puts. It hasn't moved. It's still extremely cheap. Extremely cheap. This is a bullish sign. Why? Cost for calls, stock price. Stock price is pretty high, even higher than the call. So, I mean, NIO could definitely come down because cost for calls and puts are lower than the current stock price. However, if I had to pick a direction for NIO, I would say bullish. However, pre-market, I'm assuming NIO's up. So, I mean, it's a question if you really want to chase. So, again, you know, someone mentioned SNO, and I thought SNO could resist 152, 153. Well, it's at 151 and changed this morning. I don't know why I looked up the SPY. Oh, here's an, I tell you guys one interesting play. For everybody that's stuck with me, I've got one good play, or actually 2 good plays. So, yeah, NIO's up a little. I'm looking at the 1 month chart. It's right. I mean, it's right in the middle. It's not at the peak. It's not at the top. It's not at the bottom. So I don't want to play with NIO. Understand, I'm looking to get in when I see support at the bottom or a rejection at the top. If anything's in between, what do I call that? Everybody knows no man's land. When it's in no man's land, it means it can go up or down. We don't really know. And if someone claims to know, oh, I saw this or that, it's like those sports bettors that are like, hey, call me for my hottest pick. You know what they do? Half the people that call, they tell them team A. Half the people that call, they tell them team B. You know what they're doing? They're hedging. They really don't know shit when it comes to sports betting. People can claim to be great, but you know what I tell people? Don't invest in sports betting. Invest in yourself. Invest in yourself. Invest in learning. Invest in your future. Invest in the stock market. You know, learn to trade options. The time that I used to play with poker players, I'm like, dude, you grind for 9 hours a day. You make $1,000 a day on average. I mean, these are good players, make $1,000 a day, 300 and something thousand dollars a year. I tell them, for the amount of time you put into poker for your 9 hours, you could trade options and you would be that much richer. I mean, it's just, okay, let's see. Clayton. Hey, Clayton, haven't seen you in a while, buddy. What do I think about Plug? All right, Plug falls into the more spec plays. So Plug falls into Affirm, Roblox, Plug. I would even put NIO in there, a more speculative play. These are companies that don't have earnings, that have nice valuations, that have a clear future, okay? I'm not a Blink fan, but I'm more of a Plug fan than I would be Blink. Now, Plug, if you catch a good run on Plug, here's the thing. Plug's one of those guys that if the day's red, you're going to go down 3 to 5%. If the day's green, Plug's going to go up 6 to 9 to 11%. I mean, we've seen Plug with some massive runs. So they were buying Plug yesterday. So again, if Plug is an inflow today, then we could reattach. That would be a great, okay, if you're bullish on the market today and you're bullish on Plug and you see Plug dip and you think the market's going to finish strong, that would be a great lotto play. My lotto plays, you know what I'm looking for? Hate to say it because this stock company has screwed me so many times. And just because I'm saying it doesn't mean I'm actually going to get into it. But here it is. Carnival, okay? So Carnival was at this level of $9, spiked up to $11 and change right before earnings. Not before earnings. Then they came out. Carnival's $11.11 or $11.20. And they came out and they need additional funding. So they're doing private funding for $1 billion, probably of like stock and different credit options, derivatives, things. $1 billion, right? The value of the company was $11 billion. So it fell what? Probably around 10%. It went from $11.11 all the way down to $9. So it actually fell probably like 20%. So at $9, institutions said, okay, not so bad. It's up to $9.51. That's where it closed at. Now we're up to $9.70 pre-market. So it's up 2%. Would I chase Carnival up 2%? No, but as a lotto play, if I'm watching the market and the market does this, spikes, and then we touch 394 or 395, and we've bottomed sometime. Again, this is my scenario. We bottom in the market sometime at like 1, 2 o'clock, maybe 12. I know that there's demand. So I'm looking for Carnival. So Carnival always spikes up in the morning, then it sells off. I would like to see it sell off in the morning. If I can get in at some type of base at 10 o'clock, 11 o'clock, 12 o'clock, 1 o'clock, 2 o'clock, then that might be my lotto play because I can easily see Carnival moving on a green D up, 5, 6, 7% higher after the sell-off. So that's one position I'm looking at. Let's take a bearish position. Let's say things go up high. I'm looking for a bearish type of stock that moves a little too quick, okay? So I would look at something like a TDOC, right? A TDOC, which tends to do this, right? It tends to spike in the morning and afternoon. So I might look at something like a TDOC, again, only if I thought the market was going to get ugly and throw up and the SPY was at 401 or 402, and I thought the SPY was going to go back down to 395 and lose 1.5%. I would say, okay, let's find a stock like that. Okay, let's see if we have any other stocks. Questions. Just recently found you via the Moomoo feed. Good content and morning energy. Yeah, dude, here's my problem. I've got crazy energy in the morning. I'm ready to go at like 6 a.m., 4 a.m., whatever it is. Later in the day, I get tired. So I tend to have anxiety and FOMO, which is why I trade before I want to trade. I tell myself, dude, wait till at least 11, wait till 12, wait till 1 or 2. You're trading so much better. Yet I make trades in the morning. Like yesterday was fine until I got myself in trouble with one position. I winning trade. So what am I telling myself? Dude, just slow it down. Better not to enter a trade than to risk something. What else we got here? Yeah, 7 days. Yep. So again, let me get rid of that question. Sorry. If you guys have any more questions, please ask. If not, I'm here every morning. I see the same people following me. Share with your friends. Share the link if you found this useful. Lately, my calls on the SPY tops and bottoms are great. It doesn't mean that it's happening instantaneously. But if you wait and have patience and it's part of your strategy and you're like, okay, I think the top's going to be this, and then you see it reject a couple times, then you can get into puts. But never jump in anything like that until you're ready. All right, so I'm heading off to Discord. Anybody, you're welcome to join me. You get 7 free days. Other than that, it's like $35 a month or slightly thereunder. Other channels that give you the same algorithms charge like $100, $150 a month. Shit, we give you so much more. See you guys later. I love doing this. I'll see you guys on Monday.